What is changing in the real estate market and how is that affecting the first-time homebuyer buying experience? If you've been paying attention at all just to the real estate market in the past few years, you have seen headline after headline about how home prices have soared, interest rates have gone to historic lows and then to big highs. And there's a lot of new information, especially for those of you who may be new to the entire home buying process. We are still in a very active real estate market, but it is a lot different. It is a different buying experience today than just 2 years ago. What's exactly different? Well, in my opinion, there are two main things that you need to know as a home buyer, probably from now through the end of the year. Nationwide, we are starting to see a slowdown. This is likely because of two things. One, we are starting to see a little bit more inventory on the market, which is good. Now, overall, we are still considered what is a seller's market because the sellers have the upper hand still. We do not have enough inventory to be considered a balanced market or even a buyer's market where there's tons of houses available and buyers get to be choosy. So with a little bit more inventory, buyers are having a slightly easier time finding a home. But interest rates are up nearly 4% higher than what they were last year. And this deeply affects how much home you can afford because obviously a larger percentage of your monthly payment is going towards interest rather than going towards your principal payment on your house. Because of the higher interest rates, some home buyers have dropped out of the market completely, which is also helping to slow that crazy buyer demand. So there is less overall demand placed on buyers when you are buying a house. Now, you may be hearing about this crazy slowdown, all of these price drops. And yes, we are slowing down, but the price drops are not something that you necessarily have to be scared of or something that you can be super excited of as a buyer. And let me explain what my philosophy is on those. Real estate agents, most of the time, will use comps or comparable sales as a guideline for pricing a home. If you have a house to sell and you said, Nicole, I want you to sell my house, I would say, great. I would love to come see your house. And then I will run some numbers based off of the most recent sales I can find for houses comparable to yours. And we can put together a pricing strategy that I think is going to work for this house. Now, for agents who may not be super in tune with what the market is doing on a national level or even locally in their little bubble, agents may just go straight to the computer and run some comps on your house. Now, this has only recently been problematic because we are in this shift right now. So what's happening is a lot of agents may be guiding you to list your house for a price that is too high because they are pulling data from maybe 2 months ago, where homes were still selling and experiencing lots of demand in multiple offers. We're not seeing as many multiple offer situations on a national level anymore. So that is why you are going to start seeing some more price reductions. It's because pricing the homes at the highest or the peak of when, we had all of our COVID craziness isn't realistic anymore. Now, that doesn't mean that homes are depreciating in value. Let me give you an example. So let's say, that same home that you have to sell that you called me on, you bought in 2010 for $200,000. Let's say in January of this year, your neighbor with the identical house sold his for $550,000 and had multiple offers because we were very, very competitive still back there. I wouldn't necessarily advise you to list your house at $550,000 unless I thought that our local market could support that and we could get that for you. Maybe I would advise you list it at $450,000 or $500,000. Now, that doesn't mean that your home has depreciated in value, right? Because you bought it for $200,000. So you've essentially, even if you sold it at the $450,000, gone up by $250,000. So we're not, those price drops don't equal a depreciation in value. It just means that we're coming off of the craziness, and a lot of people don't know how to price homes to kind of combat what's going on in the current real estate market. As a home buyer, you just need to team up with a great real estate agent who's going to be able to help you navigate what is an accurately priced home and how do you make competitive offers on that home. The reason that I also want to bring this up is because the second thing that I'm noticing right now in this shift is that there is a large difference between metros right now and what they're experiencing. So with COVID and the real estate markets, a lot of the larger metros like Dallas, Austin, Nashville, Phoenix, Portland, Seattle, a lot of these metros saw huge hundreds of thousands of dollars in appreciation on real estate because there was just tons and tons of buyer demand, not enough homes to go around. In my market, which is much smaller, Central Arkansas, we saw homes appreciate at like the peak, the highest of the high, maybe go up by $40,000. Like nothing compared to larger metros, right? So on the reverse side, I am seeing a lot of the larger metros come back and do a lot of price reductions quicker than my market. So I'm talking to agents who are in Phoenix, agents in Austin, where they're saying, "Hey, Nicole, we're listing homes. We're not getting offers in the first week. We're not getting offers in the first 2 weeks." So as a buyer in those metros, you may have a lot more opportunities now than you ever have. In some of the smaller metros like mine, we are still seeing multiple offer situations. Now, we're not seeing 20 offers on a property, but there was one just the other day that we had 5 on. So we are still seeing multiple offer situations in markets that weren't so like up and down. That's another thing that you need to be aware of. So as an agent, what I'm doing as a best practice is meeting with my clients, making sure they have all of their ducks in a row for their home purchase. And then what I'm saying to them is ultimately, like, I can't tell you that we're going to be able to go in at list price on every house that you want to make an offer on and get it. I'm not going to be able to tell you that we can go in, $10K under and ask for closing costs. Right now in this transitionary market, it really is one of those things where I would have to guide you based off of the attention that the house you are interested in is receiving, and if we know that there are any other offers on the table. So if you are ready to start that process, you are doing your research and you think that you are ready to jump in kind of in the next 6 months and you want a great agent beside you, of course, if you're in Central Arkansas, I would love to help you with your home purchase. But if you are not, I would love to help you get connected with an agent who can help you in your market, who is a specialist in that area. So I do have a link in my description below where you can get connected with someone who will help you out. Of course, if you have any questions about what we talked about today, let me know in the comments. I'm Nicole Nark, Arkansas real estate broker with videos to help you find your way home, and I will see you in the next one.